Hey folks, welcome to another video by Stock Trades. My name is Matt, and today we are going to do something a little bit different. We are going to look into a couple of ETFs, exchange traded funds, with a particular focus on the blockchain. We know that Bitcoin has been surging in popularity over the past couple of months, and we've been getting a ton of questions on both Bitcoin and blockchain stocks. So we figured we'd take a look at two of the leading ETFs, and we'll get to that right after this. Before we jump into the two ETFs that track blockchain technology, we did want to spend a little bit of time understanding exactly what blockchain is. One of the common misconceptions is that Bitcoin and blockchain are one and the same. To those uninitiated, or to those who are not yet educated to the full extent on this particular industry, they are far from the same. Bitcoin is simply a cryptocurrency, a medium of exchange, if you will. Blockchain is the technology that underpins cryptocurrencies, such as Bitcoin. To give you the more formal definition of blockchain technology, it is a decentralized ledger of all transactions across a peer-to-peer network. Using this technology, participants can confirm transactions without a need for central clearing authority. And this is where the decentralization comes in. And the potential applications are numerous, well beyond cryptocurrencies. Some of the benefits include increased transparency, more accurate tracking, the creation of a permanent ledger, and significant cost reductions because we are talking about getting rid of the need for central clearing authority. There are several still unknowns. We don't know how it will be regulated. There are still several implementation challenges. And there are competing platforms, software as a services, if you will, that compete with blockchain. In effect, how blockchain works is pretty simple. Somebody requests a transaction, and that transaction is then sent to that peer-to-peer network of computers, which is known as nodes. These nodes then validate the transaction using known algorithms, and then the transaction is then verified. Once the transaction is verified, it is combined with other transactions to create what's known as a block of data for that particular ledger. That new block is then added to the existing blockchain in a way that is permanent and unalterable. And those are two very key aspects of blockchain, is that it should, in theory, reduce the level of fraud, it should reduce the number of errors, and everything can be tracked quite well. And then the transaction is completed. So the potential applications for blockchain far exceed cryptocurrencies in of itself. Personally, I'm quite excited about blockchain and the significant improvements and efficiencies that we can see out of blockchain. You see here some examples, which include faster and cheaper settlements in financial services. You could use blockchain to manage fractional ownership of cars, if you will. Voting is an interesting one, considering how there's a significant lack of trust with online voting. Blockchain can be a solution to that. And patients encrypted healthcare data could be involved in blockchain. So it really is a next generation type of technology, and one that investors should get to know a little bit more about. One book that I recommend, not only to investors, but to just the general public who are interested in learning a little bit more about blockchain, it's called The Blockchain Revolution. It was first written back in 2016 by Alex and Don Tapscott. I'm not sure if there's been an update to that particular book yet, but I found it to be an easy read, a very informative read that really helps readers understand the potential of blockchain. That is a very quick overview of blockchain technology. I would strongly recommend that investors do more due diligence. We can spend hours talking about blockchain technology and the potential applications. But for today's purpose, let's look at two ETFs that track the industry. The first one being Harvest's blockchain technology ETF, HBLK on the TSX. HBLK was first launched in December of 2018, and outside of this year, it really has done not a whole lot. Then 2020 hit, and the sudden increase in popularity for Bitcoin has sent HBLK's share price soaring. As you can see here, its adjusted return since inception is about 44%. So that is worth knowing that it really did nothing until June of this past year. The fund aims to track the performance of the Harvest Blockchain Technologies Index. And that particular index is comprised of securities which are exposed directly or indirectly to the development and implementation of blockchain and distributed ledger technologies. It holds a mix of well-established large caps and standalone emerging blockchain technologies. As of the end of November, emerging companies accounted for approximately 55% of holdings, while large cap companies accounted for 44% of the fund. At 1.68%, its management expense ratio is quite high for an ETF, and it is one that investors must be aware of. As of filming this, the company is trading at a premium to its net asset value of $13.70 per share. Once again, this is as of November 30th. The updates for December have not yet been released, and it's a smaller ETF with holdings of approximately 10.5 million. So given this, it will be prone to greater volatility. A quick look at the company's top 10 holdings, and you will see a nice variety of emerging and large cap companies. You see DocuSign is the top company there with 5.6% of holdings, followed by Square and Overstock. You'll also see some blue chip names such as Oracle and Intel and SAP among the top 10. IBM is also in there. And it's pretty well diversified with no security accounting for more than 6% of the fund. The top 10 account for approximately 50% of assets. Approximately 75% of companies are headquartered in the US, 10% headquartered in Asia, and the rest spread out globally. Overall, it's a pretty interesting ETF. I like the fact that it's spread out across both emerging and large cap companies. And what does turn me off, however, is the 1.68% MER ratio. That's very high for an ETF and something that investors will have to consider before investing. The next ETF we're going to look at is Horizon's Big Data and Hardware ETF. Horizon's Big Data and Hardware ETF, HBGD on the TSX index, also trades under HBGD.TO, which is the US traded version. So it trades in US dollars. Much like HBLK, it got its start in 2018, June to be precise, and it also hasn't done much until this past year when it has shot up significantly. A $10,000 investment in HBGD would be worth approximately $17,500 at the end of November. So it has performed much better than HBLK. However, the majority of these gains, once again, have come over the past 6 months. One of the interesting aspects of HBGD is the fact that it actually pays a small yield of 0.76%. This is quite surprising as most technology ETFs, especially one centered around blockchain, typically don't pay dividends or distributions, if you will. So this is a nice little bonus for investors. The holdings are made up of approximately 50% mid to large cap stocks, while 23% are micro cap stocks. So this is important to note because that means it is likely to be significantly more volatile. Once again, it's a small fund. It only has 7.1 million in assets, and in my opinion, is a higher risk investment than HBLK. On the flip side, the company's MER fees are much more reasonable. At only 0.55%, it is approximately a third of the MER fees of HBLK. One of the reasons is likely because it tracks the selective blockchain technology and hardware index. So it does track an index specifically, which tracks companies that are focused on blockchain innovation and development, as well as companies that provide hardware and hardware related service used in the application of blockchain. So this is a very different ETF and one that you'll see by the top 10 holdings looks entirely different than that of Harvest's HBLK's ETF. The top 10 holdings account for approximately 50% of the fund, so that's very much like HBLK. However, the makeup of the top 10 is highly concentrated in two companies in particular, Hive Blockchain and Riot Blockchain, both of which are cryptocurrency miners. So they are actually focused on mining cryptocurrencies such as blockchain. So that is very different than HBLK. So combined, the two of them account for 30% of holdings of the entire portfolio. This in of itself makes it much more riskier than the HBLK. It is also likely why the company has outperformed HBLK because Hive and Riot have both skyrocketed over the past few months given the rise of Bitcoin prices. It also has a smattering of large cap companies such as Western Digital and Micron Technology you'll see at the bottom. And it does have several other interesting plays such as Future FinTech Group and Winbond and Sky Hynix. Approximately 50% of holdings are headquartered in the United States, 12% here in Canada, and approximately 30% or so in Asia. So this is a much more globally diverse ETF than HBLK. HBGD is very much centered around Hive and Riot blockchain. So this is not only a blockchain ETF, but it's also centered on cryptocurrencies given the exposure that Hive and Riot has on holdings. Overall, this ETF is very different than HBLK. It is very concentrated in 2 companies. Performance is very much based on the performance of Hive Technologies and Riot Blockchain. One of the nice parts about both of these ETFs is that they are very, very different. So one could, in theory, hold both without much overlap between the 2. Personally, since I'm not a big fan of ETF and mutual fund investing, and I prefer to invest in individual stocks, what investors can do is look at the top 10 holdings and do their due diligence on these top 10 holdings and perhaps select a couple of stocks that might interest you more. That's something that I'm likely going to do. I've looked into Hive Technologies and Riot Blockchain before. I'm not a fan of the mining model. I'd prefer to hold the actual cryptocurrency itself. But there are other companies here that might be of interest to you. And it's the approach I'm going to be taking and moving forward is looking at these top 10 holdings and see where there might be value to be had and where some exciting emerging blockchain technologies are being used. So that's going to be my approach. It's not for everyone, but I think either of these would do well to track blockchain. So really it's going to be based on your preference. But there's no harm in holding both of these by the looks of it. The only downfall to HBLK, as mentioned, is the high MER fee. That is likely because it seems to be more of an actively managed ETF. However, for those who are just looking for exposure to the industry, it's an excellent option. So we hope you liked it. Please let us know which blockchain technology companies are you interested in. Do you hold either of these ETFs? Are there any other ETFs that you are potentially looking at to gain exposure to blockchain? Be curious to hear your thoughts. As always, please like the video, subscribe to our channel for more great Canadian content, and we'll get back to you with another video on blockchain, and we're hopefully going to be providing you with more content over the next year. We're going to increase the frequency of our videos, so stay tuned. You will be getting more notifications, so please make sure you hit that subscribe button to receive notifications whenever we post more great Canadian content. Until next time.